Hello guys, and welcome to the Vertical Spread Trading Journal for Friday the 8th of January. And this is the first journal of 2021, so Happy New Year to everyone. My name is David and I'm also known as the Spread Doctor. It was a record-breaking day on Wall Street today, and both the S&P 500 and the Nasdaq closed at all-time highs, record high. The Dow was down a little bit and the Russell was up a little bit, but neither of those two managed to make record highs today. But for me, the interesting story of the week has got to be the Tesla story. I mean, Tesla has been in a parabolic move up since it joined the S&P 500 in December. This is a one-year chart of Tesla, and this is this large volume candle here, this one. That is the Triple Witch Friday, the December expiry, when the last trading day before Tesla joined the S&P the following Monday. So this is the candle here. You can see how much volume traded on that day, and ever since there has hardly been a downtick in the stock. It has just taken off to the upside. And this is, Tesla is now the fourth most valuable company in the S&P 500. A company that just joined the S&P 500 is now number 4. I think it surpassed Facebook's valuation today. And Tesla's current share price has allowed Elon Musk to dethrone Amazon's Bezos as the richest man in the world. That title now belongs to Elon Musk. This volume here, I'll just touch on it. I was anticipating something like this volume in MRNA when the gap got filled, but I'll cover that when I cover open positions in MRNA. Back to the Tesla story. Remember this guy from The Big Short, the book, or maybe you saw the film? Right, so not everyone is convinced about the valuations Wall Street is slapping on Tesla. And the famous investor Mike Burry from The Big Short, and one of the few guys who saw the bubble in the housing market before 2008. I think he shorted the housing market via credit default swaps around 2005. Anyway, he is short Tesla, and he's telling those long Tesla to enjoy it while it lasts. This is him here. That's the scene from the film. If you haven't seen it, I'd recommend it. I'd recommend the book. But if you're not into reading books, then watch the film. It's a fantastic story. So Mike Burry has deep pockets and he has staying power. He waited over 3 years to cash in on his housing market bubble thesis. But with Tesla, only God knows how long he needs to wait this time. There are quite a few hedge fund managers who've had to throw their hat in the ring, having lost billions trying to short Tesla. And I'm not sure if the investors in his hedge fund will be as patient as he is. Especially when they see headlines about other hedge funds doing fantastically well. Pershing Square, Bill Ackman's hedge fund, reported a return of 70% for 2020. Putting that in dollar terms, he made a return of $8 billion for his investors. At the same time, Mike Burry is, he could return $20 billion when Tesla crashes, but nobody knows when that's going to be. But let's look under the hood of Tesla and see if the valuations make sense to the average Joe on the streets. Now, I'm not talking about whether the valuation being placed on Tesla is justified, because I'm not qualified to make that assertion. And I simply follow the axiom, the market is always right. Of course, until it's wrong, but the market is always right. And then the market is no longer right. So I will start by looking at the total number of cars delivered by Tesla in comparison to other car manufacturers. So in terms of the number of cars delivered globally last year, you got VW at number 1. They delivered 10 million. You have Toyota, call that 9.5 million. Renault, Nissan, 9 million. General Motors, 7 million. You get the story. Honda, 5 million. Tesla is down here. Tesla delivered, it's not even 1 million. Let's give them 1 million, but there you go. VW delivered 10 times more than Tesla. Toyota 9 times more. So that's one data point to look at when, well, that's one data point I look at when trying to justify the market cap for Tesla. So they haven't delivered the most number of cars globally. They're not even in the top 5, and they delivered, what they delivered was insignificant in comparison to what VW delivered. Now let's look at the top electric cars produced in 2019. Tesla is clearly the leader, but Tesla's lead is not double the number 2. It's got a dominant position, but the dominance is not as pronounced when you look at the total number of cars delivered. So that is another data point I'll look at in trying to justify trying to explain Tesla's market cap. So in terms of electric vehicle, you know, they did better than BYD. I presume that's a Chinese company. Never heard of it. This one, BMW, that one I recognize. VW. So they delivered about 3 times as much as BMW. So that's another one. So this one is in favor of Tesla. They're delivering more electric vehicles than any other car manufacturer on the planet. The gap is big, but it's not double. So that's another data point I'd look at. Another thing I'd look at is the top selling cars in the USA. So number 1, you have Honda selling 86,000 cars, Toyota 82,000, Toyota Camry 82,000, Toyota Corolla 81,000, and you have Tesla Model 3 down here at 43,000. So Toyota, two of Toyota's models, the Camry and the Toyota Corolla, is more than, that's about 4 times of the number of cars that Tesla sold in terms of the 10 best-selling cars. So Honda is there, Nissan is above, and then you got Hyundai and some other ones. So on this data point, best-selling cars, Tesla is 1, 2, 3, 4, 5, number 6. That's something else to bear in mind when you're trying to understand the valuation Tesla has. Another data point I'll look at is the actual number of cars that Tesla has delivered over the years and whether that number is ramping up. As you can see, the numbers have been steadily rising since, let me make this thing bigger. The numbers have been steadily rising since 2012, with an explosion around 2018. And I think that 2018 explosion coincides with when Tesla opened a new factory. The numbers are now beginning to flatten out. I mean, not much gain, not much growth from here to here. Here actually dipped and then it's gone back up again. And perhaps they need to open a new factory to get these numbers to double again in order for them to keep on growing. And I believe Tesla is working on opening a new factory in Germany. When it will open, I have no clue, and whether that would have the capacity to double Tesla's output, I don't know. But that's another data point. It was growing rapidly. and now it's high, but it's now beginning to taper out. This to this, there's not much growth there. So that's something else I would look at. And finally, I'll save the best for last. The market cap. So this is the market cap of Tesla in comparison to the other car manufacturers. You can see Tesla has got a market cap as at 31st of December that has gone up significantly. It was up about 8% today alone. I think that added about another 10-20 billion. So market cap as at end of last year, Tesla 669 billion. Toyota, which produced about, we say, double or 3 times the number of cars, 250 billion. Volkswagen, about 200 billion. Mercedes Daimler, about 150 billion. You get the story. So the market cap of Tesla is greater than the combined market cap of Toyota, VW, Daimler, GM, BMW, Honda, Ford, and FCA. I believe that Toyota, VW, Daimler, BMW, Honda, I'm not sure about Ford. I believe they even have better margins than Tesla does. And apparently Tesla's margins, they only work with the government electric vehicle subsidy or the green subsidy. It's some kind of environmental discount they get back from the government, which makes their cars profitable. Trump's administration threatened to pull the plug on those subsidies, but with Mr. Green Biden taking over soon, that subsidy may not only just be extended, it may also be made even bigger. So there you have it. This is what I see when I look under the hood of Tesla. The question is, does Tesla's valuation make sense? And I'll leave you to be the judge of that. Does it make sense given the number of cars they produce in comparison to other manufacturers, given the number of top 10 cars they have, blah blah blah? Does it make sense? I'll leave you to be the judge of that. Moving on to the VIX. The VIX was down about 3.6% today to close at 21.56, and it's edging ever so closer to the 20 key level. But with VIX above 20, it still bodes well for selling premiums, for premium selling strategies like our credit spread. So it is not all bad news. VIX over 20 is still good news, but trending in the wrong direction, if you like. There are now 6 days until the January contract expires, and there are 41 days until the February contract expires. So that leaves about 6 more days for my selling window to close, and I hope to find a couple more trade ideas before then. But first I have to close out the MRNA position and release some buying power. I'll cover the MRNA shortly. In terms of trade ideas, I had one new trade idea today in TAN. I sold the 105-100 put spread, and I'll drop a link to the trade idea below. But this is the trade here, TAN. I sold the 105-100 put spread for a crate of 1.42. IV was 51.8. It was trading at 119.25 at the time. And now I'm going to move on to my open positions. I now have 3 open positions, 1 of them in the January contract and 2 in the Feb contract. Let me address the first one, MRNA. So MRNA, I'm going to cover 2 positions. MRNA started off as a put spread. I sold the 115-110 put spread. I collected a credit of 2. I then converted it to an iron Condor, made an adjustment by selling the 165-170 call spread, and I received a credit of 106, and my total credit is 306 on that position. So with MRNA, I anticipated there would be a spike in volume after the gap got filled. One sec. So this is a 1-year chart of MRNA. I anticipated there would be some kind of volume spike once this gap here got filled. Actually, this is the gap. This is the gap here, this tiny gap, and it got filled around here. And I anticipated there would be something like, maybe not this pronounced, but this kind of volume explosion after this gap got filled. But instead we've gone into a kind of consolidation pattern. The spike in volume is yet to materialize, and the stock is being whipped around a lot on below average volume. So before Christmas, or towards the end of last year, the daily average, the 10-day moving average volume was around 30 million. That volume has now come down to about 20 million, and I think today less than only 12 million shares traded. So this thing is moving down, not because the sellers are aggressively selling it, but because the buyers are not stepping in. It may still come, the volume may still come, but the clock, it has simply run out on this position. I've been in this position long enough, and I intend to close it early next week. I'm going to adjust my target price upwards early next week, hopefully Monday, but I don't know where yet. I don't know what price I'm going to adjust it yet. I don't know what price I'm going to adjust it to yet. I'll let the market lead me on that on Monday. But I think I've been in it long enough. Let me see how long I've been in this position. So this is MRNA. So I've been in this position for 38 days. That is long enough. I've given it enough time. So I am going to pull the plug on it. Now let me move on to the P&L for these positions. As at the close today, MRNA closed at... So at the close today, MRNA closed at 112.75. It was down another $2.34. I'm going to cover the iron Condor position first. So the downside break even on the iron Condor is, and this is the iron Condor here, the combination of, just scroll, these ones in yellow, this and this, collected a credit of 306. The downside break even on this position is 111.94, 111.94. The stock closed at 112.75, which is still above my break-even point, and because of that, the iron Condor position is showing a small positive P&L of $58 per contract. If I go to my portfolio tab and look at my MRNA, so MRNA is showing an open P&L of 290, and I think I got 5 contracts in this one. Got five contracts, so that works out about $58 per contract positive P&L. My short strike, my short 115 strike is in the money, but because of the extra credit I got from selling the core spread, that was able to offset some of the losses on the put spread, and I'm left with a positive P&L. So, like I said, I'll be looking to close this position out early next week. Moving on to the put spread. So, if the put spread was not converted to an iron Condor, if you left the put spread alone as a standalone trade without converting it, then you would be showing a small negative P&L on your position. I think the negative P&L would be around $30 or so. So in this one, sold the 115.110 put spread for $2. MRNA is currently trading at 112.75. The downside break-even point on this position would be 113. So with the stock at 112.75, it is below the break-even point for the standalone put spread, and this position would be showing a small negative P&L. Well, negative P&L of $35 per contract. How do you get that? If I explode this, so on the 115, so this is what I'm looking at, just this one here. The open P&L, oops, it didn't. If you deduct the open P&L, if you deduct this from that, you will get, most platforms would do this on a per contract basis, but I think Tasty has done it 5 contracts, so bear with me one sec. The negative P&L works out at $50 per contract, negative P&L per contract. So if I deduct the negative 3012 from 2762, it gives me 250 divided by 5 contracts, and I get my $50 per contract. So if you didn't convert this position into an iron condor, you currently have a negative P&L of $50 per contract. But as I mentioned earlier, I'll be adjusting the profit target early next week, and you may have to bite the bullet on this one and just cut the losses and move on if you didn't adjust it. If you did adjust it, then you do have some profit on this position, and I'll be looking to just close it out next week and put the money to work in something else for the February contract. Moving on to my second position. So I've got 2 new positions for the February contract. I've opened both of these positions this week, so I'm not going to do the P&L analysis this week because end of next week will be the end of week 1. But the first one, NVCR, I sold the 140-135 put spread. Let's see where NVCR closed out today. So NVCR closed at 170.38, and I sold the 140 put. So my short 140 put is out of the money and no action is required on this position. The second position is in TAN. On this one I sold the 105-100 put spread for credit of 142. On this one I sold I initially sold 4 contracts at 135, and then I sold another 4 at 150, and the average price is $1.42. That's how I got $1.42. Let's see where TAN closed today. So TAN closed at 119.13. I am short the 105 put, and yet again my short strike is out of the money and no action is required on this one. Let me go through my watch list. It's quite long. I've got a long watch list today. Just whip through them one by one. First one is QCLN. QCLN is a green energy ETF trading at 83.56, implied volatility 92.56. The second one is ARKG. This one was brought to my attention by one of our members. Thank you for bringing this to my attention. 105.86, implied volatility 70 let's call it 70. Third one, ARKK. ARKK trading at 142.48, implied volatility 69.1. Then I got BMRN. Just closed out a position in this one earlier in the week. Trading at 89.86, implied volatility 66.1. Then EDIT. $90.58, implied volatility 65.7. Got PBW. $122 stock, IV 57.9. I got TAN, Solar Energy ETF, $119, IV 56. LIT is an ETF, lithium battery ETF, IV 55.4. The next one is PDD, $180, IV 53.9, and the last one is NVCR, $170, IV 51. So everything on my list has got an IV greater than 50, and that's the only reason why it would have made it onto my list in the first place. And that brings me to the end of my journal for today. The main highlight would be the MRNA position. I'm looking to close it out hopefully on Monday. I don't want to take it beyond Tuesday. It expires on Friday, so on the iron Condor, I would look to close it and take whatever profit is available. If you have the put spread, then it's time to cut the losses and move on and put the money into work on another position. There are 6 days left until the February contract expires. I've got 2 open positions in February. I'd like to get 2 more positions, so keep an eye out for the Trade Idea Alert Forum for new trade ideas. I hope you enjoyed listening to my journal, first one of the year. You can leave me any questions or comments below, and have a great weekend. Goodbye.